Hi, this is Jonathan Gurney with Gurney Financial. Today is Friday, about at 2 hours and 30 minutes before the close. So understand that these are not end of day close numbers. It's close to there. Don't expect a ton of fluctuation, but I will be watching closely. Just kind of want to give you our mindset into the weekend, game plan ahead, and overall thoughts and what we're seeing in the market. Again, none of this is a recommendation. This is informational purposes only, but hopefully you learned something if you're a non-client, and if you are a client, fantastic. This is mainly for you so you can see what we're thinking and why we're thinking it. So right off the bat, really nice week. What do you notice here? The Russell 2000 led the way again, which I'll be honest with you, I don't have a crystal ball, but that surprises me. I would not have expected that with all the volatility we are seeing with stimulus and so on. It did surprise me. In fact, on the way down, I got out of some small caps and shifted to the leaders that usually do well when things dip. So to kind of take a recap on this, let's actually go to a quick chart of this. The S&P 500. There we go. So really, here is the beginning of September. We saw the S&P 500 saw basically a 10 and 11% dip. And up here, I basically said to clients, hey, I'm going to go broad-based, meaning mainly ETF and add a lot in cash. And we added about 20 to 25, in some cases 30% in cash. Obviously, in hindsight, I wish I had added more to cash, but we got out of individual names and did not get absolutely. Some people would consider a 7% dip to be getting killed, but we really did not get killed. I'm glad we weren't in individual names because some of those names did go down 20, 30%. But did we time it perfect? No, we're realists about that. But we did pretty decent. And so this allowed us to add very near the bottom. If we're showing you charts on that, I can kind of show you what we've been showing people all along are the key levels. And this has really helped throughout the week to kind of show people, listen, we're going to have volatility. And these moves are not fun. I mean, these are 3.5% moves, okay? And this continued to happen, but we are seeing great improvement in breadth, meaning across the board, not just tech, everything is starting to rally a little bit here. So you have those people that were at the bottom, when the Nasdaq was down 15%, basically saying the world is ending, this doesn't look good, case count is increasing, and all those things are true. There are a lot of things did not look good, but you have to understand when everyone thinks that way, and that's basically what I was seeing was, everybody that I follow was saying, here's the end of your target, here's where I think we're going to go down to. And when that happens, the selling is probably pretty close to being over. And so I actually added and took a risk there and added to a lot of the leaders that had gotten smashed. And that's why we're doing well. We're not 100% allocated. We got up to 85% allocated. And today, actually, I reduced position. I'm about 78% invested and kind of cleaning up portfolio. So at this point, it's kind of a fear of missing out scenario because people are like, oh man, I was just told by everybody and their brother that the market's going to go down. And so people are trying to play catch up here to think, you know what, could this actually, I'll get a different chart here so you can see it. Could this actually test all-time highs? Is this the gate now that we're past a lot of key resistance levels? Is this the gate to all-time highs? That's what the general public is probably thinking. I think generally we'll probably go sideways here. But again, usually Mondays are gap up days, and there's a lot of stimulus news out there that will probably boost. Now, could it be a sell the news event? Potentially. So that's kind of where I'm saying be a realist here. Some of the ETFs that we were in were up 12% in 2 weeks. I'm going to take some gains there. Just back off a little risk. Be a realist. But we are basically, to kind of show this to you, our goal is to try to beat the S&P 500. And doing that with 75% invested is not easy. We are doing that. So The S&P 500 is up 3.77% this week. We are up about 4.3. So that is really where we want to be, where we have some cash to add. Again, nobody has a crystal ball here. I do think that regardless of who the president is, that it will be a good thing for the market through the end of the year. We just got to get through the volatility and through the election. So everybody and their brother are saying, hey, I don't expect a lot of movement. It could go down during the election. Everybody thinks that. And when that happens, the market has a way of proving you wrong, which is why I'm saying, I'm telling you as clients, I will never go 100% cash likely. So I might get down to 50% invested and 50% cash. But at this point, if we keep going higher, I will slowly start trimming again. But right now, you got to understand a lot of people are in the fear of missing out mode to say, gosh, are we missing another rally here? Again, when things get negative, people want to sell. And so people are like, do I add here? What do I do here? Am I missing out? So we're in a good position where we took full advantage near the bottom, and hopefully we'll be able to sell into the rally again and do it all over again. So I feel really good about where we stand. Going to go over a few charts pretty quick here, so hang in there. But this should have been helpful throughout the week on social media. We've been posting these levels. Finally got out the kind of the red, yellow, green, and we're past all of that now. Okay, so the next level that was on our chart was basically 3470. The next level is pretty close to 3500. So these are levels where I'm kind of like, hey, it would make sense to probably consolidate a little bit. And I do think we potentially could go a little bit higher. So I'm banking on potentially a little bit of a dip, nothing serious, and I'll buy again. So regardless, it's been a nice week, a nice comeback week. We added very near perfect times. Doesn't always work that way, but very, very good timing this time around. So trying to play a little bit of catch up. Again, we did really well on the February-March dip in preventing the dip. We still lost money, don't get me wrong, but we cut that in about half. On the way up, I'll be honest with you, did not do very well, did not follow discipline. My normal rules, got caught up into the news, which is a mistake. And now we are actually back on track and doing pretty well. We're trailing S&P a little bit this year, but not horribly. And I'm feeling pretty good about where we stand, given the fact that the market saw a 40% dip. But trying to regain some of those, playing a little catch up here realistically. So that's just the honest truth. We're happy to disclose that. We don't time every month, every week, every year perfectly, but in general, we've done pretty well. So kind of interesting to kind of take on a lot of different perspectives. This is the cross of the 8-day and the 20-day, 21-day moving average. This is a red flag when the blue crosses the gold. We were already, even before that, reduced positions. This is kind of a second warning. Hey, be careful here. But look, we crossed back. That is a good sign. And that's basically what I wanted to show you there. This is just kind of to show you, and we talked about this, the Nasdaq, the leaders saw a 15% dip. Everybody's screaming here, oh, this is going to go to the 200-day moving average. This is going to kill us if stimulus doesn't come in. This is going to kill us. You hear everything horrible at that time. Now, these are not fun moves. I mean, like we said, these are 5-6% moves back and forth. This is not fun to stomach. Not fun weeks whatsoever, because you think you're out of the woods. Nope. Rejection. Back up. Finally broke. We'll see what happens here. The good news is that there could be some more room to run. I like where the PMO is. I like where the MACD is. So there could be some room here, but I'm still going to be a little bit cautious. I still am very broad-based. Not doing a ton of individual name exposure, but we definitely do have some momentum on the table still. So feel pretty good about where we stand. Put call ratio is very low. This is kind of a warning flag. We've said anytime it gets in here, you got to be careful. Now there's so much FOMO, I'm keeping some on, but I'm a realist in what I see there. Okay, so I wanted to keep you posted there. again, kind of the hockey stick maneuver here. One hockey stick, another hockey stick in the VIX, the fear index. We're kind of on the way down here. I like this. Now, it's probably going to chop a little bit here. Be a realist here and understand that you just don't go up in a straight line. It will go up and down a little bit here, so hang in there. But overall, don't hate what I'm seeing. And another perspective there that I was kind of showing earlier weeks ago was, hey, can we stay below the 200-day moving average, the 50-day moving average? Can we stay below there? It did not. It did the hockey stick, and we're kind of back on the way down. Let's see what happens at the 50-day moving average here. So kind of interesting. Again, this is kind of a fear index. Not a bad thing what we're seeing here. So again, watch price action. That's what I try to preach to my clients is the news is horrendous, but price action has held key levels, as I was showing in the red, yellow, and green charts. So hang in there. Put call ratio, value versus growth. This is interesting. Even though small caps has done fantastic, it gets to that range, similar time frame, similar price percentage, where growth kind of says, okay, time to play a little catch up here, and that's kind of what we're seeing. But again, I'm not dissing the move in value. I like to see when value is doing well because it's good for the entire market. So I'm not disappointed that I missed out on the small cap move because it just makes the entire market do well. This is to asset management exposure, active management exposure, now to 73. So again, where were we during the March dip? Got down to 10%. That's horrible. That means that people basically sold at the wrong time and added way late. Okay, so that's not what you want to see, but now we're going in the right direction. Again, there's nothing like price to change sentiment. That's exactly what this is showing. So seeing an uptick there is not a bad thing. McClellan Index, seeing a little bit of an uptick. We've been showing you this, and we showed this last week to you, that seeing an improvement in breadth needs to kind of happen right around here. And look what happened. It did right where it needed to. Bottom line, that's another reason why we bought, is to say, let's see if this turns around. This is a pretty common level for it to turn around, and it did. Another indicator that we watch, again, none of these are buy or sell immediately signals, but this was another one where we basically said, look, this gets into the worrisome yet it could turn around zone. This is percentage of stocks above its 50-day moving average in the Nasdaq. Got to the yellow area where I'm saying, hey, usually there's either a turnaround or we go lower. Got to be careful here. Went up, as you can see. Nice move. So everything we've been kind of watching closely, we've done quite well over the last few weeks. It hasn't been fun? No. And I promise you, we're probably likely going to see big fluctuations, and that's okay. If key levels don't hold, I'm out. Okay? So we're doing okay. I want to check to make sure there's not any more charts. I think that's really all I have. A few areas we're looking at, a few areas we added to this week. Was ARKW, fantastic, all-time highs. Took some gains in this today on Friday. Sold about half of what I added. Pins. This consolidation is not a bad thing. I'm watching closely. It's struggling to get out of this 34 range. Our trading group is watching this closely. It's not necessarily great for options yet, but I do own a little bit of it in stock. AMD, not a good day for AMD, but I'm eyeing this because it's interesting. Let's see where it's at now. That was at 1 p.m. Yeah, it's coming back a little bit, but I'm going to usually buy these when it's close to the 10-day or 50-day moving average. So just keeping you posted that I'm watching. These are names that I'm watching closely. Okay. I think I'll do one more that I'm kind of watching. Nice little breakout. Now, could it be a little bit much fast, a little too much too fast potentially, but it definitely doesn't look bad from a chart standpoint in the PMO and MACD, nor does it. It's a little bit outside of the cloud, but that can happen. As you can see here, it got out of the cloud and went up a few more days. So I've seen a lot of good things. Can't complain about this. Into the election, I like where we stand. I might on dips add to get quick gains and get back out again. But overall, the market is kind of shifted and breadth looks pretty good. We actually timed this one pretty well and getting in, got to about 85 to 90%, a little more in some portfolios. Now we're basically down to 78%. Really cleaning up portfolios here. So let's see if we get a gap up Monday. I'm hoping that happens, and if that happens, I'll probably trim a little bit just to be real with you. So thanks for your trust. Hang in there, everybody. The less news you watch, probably the better off you'll be. Always ask questions. We're here for you. Thanks again. Have a great weekend. Bye.